We would have come across certain situations where a business reports operating loss, but still they will have net profit. Look at this case. X Limited has reported operating loss of 2 crore but recorded net profit of 1.5 crore. What we have to infer from here? For that, first of all, we have to understand what is operating profit. Operating profit means sales minus operating expenses. So, if a business has sales greater than operating expenses, they will have operating profit. And if the sales is less than operating expenses, obviously they will have operating loss. And it is possible for certain businesses to report profit despite having operating loss. That is, despite their sales being less than operating expenses. How they do it, how they achieve it. These are all the cases where they have non-operating income greater than operating loss itself. If you look at this case, they have operating loss of 2 crore and they have non-operating income of 3.5 crore, which is greater than the operating loss figure, and because of that they are able to twist the position, right? Without this non-operating income, they should have reported a net loss of 2 crore, but because this has come into picture now, the scenario got changed. From operating loss, they are now moving to net profit position of 1.5 crore. But this is not a stable situation. First of all, this non-operating income is not dependable because it is not a recurring or regular in nature. So neither the investors nor the lenders will be happy with this net profit of 1.5 crore, which was achieved because of non-operating income. Why? Because operating loss is a concern. This is a matter of concern because from their core activity, they are not making money. We cannot become complacent that they have reported profit. No, they have reported profit from non-operating income. They are non-recurring in nature. They cannot be expected in future. So in these kind of scenarios, those organizations should take serious steps to maximize their revenue from core operations. If the revenue from operating activity, that is the operating profit from operating activity, if it is not matching with the expected return on investments, then they got to take serious measures. They got to take steps to restructure to ensure the operating profits are contributing to net profits and not the non-operating income. And here we go. Credit and Financial Analysis Mastery Course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1-year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.